Hello everyone and welcome to the TaxGate. Global minimum tax. One of the hottest tax topics recently, but what does it mean? And why global minimum taxation rules are coming in place now? That's what we are going to discuss within this video, so let's get started. Global minimum taxation rules fall under the umbrella of BEPS project. BEPS, which stands for Base Erosion and Profit Shifting. BEPS project is an initiative of both G20 countries, the Organization for Economic Cooperation and Development (OECD), trying to amend international tax laws which had not been changed long time ago. BEPS initiative seeks to close the gaps in the international taxation laws, trying to tackle harmful tax practices and tax avoidance through profit shifting. Also trying to streamline international tax rules and to create more transparent tax environment. BEPS project has 15 action items introduced by OECD, trying to standardize the international tax rules and to prevent multinational enterprises from avoiding paying taxes through profit shifting. Those actions are mainly covering the following: focusing on tax challenges against digital economy, reviewing current tax rules to prevent treaty benefits abuse, focusing on transfer pricing outcomes and higher transparency around the transfer pricing documentation, smoothly amending bilateral tax treaties, trying to resolve treaty-related disputes. Well, so now let's move to BEPS initiatives and the related phases, as we might say that BEPS project has mainly two phases till date. So within the first phase, both G20 and OECD came together to address tax avoidance issues, trying to ensure that multinational enterprises pay a fair share of tax wherever they operate, which means that the profits should be taxed where the related economic activities are generating those profits and where the value is created. And then BEPS Phase 1 has led to BEPS second phase, which focuses on the tax challenges arising from digital economy, and that's why both OECD and G20 came together with an updated statement for an agreement including two pillars solution to address and tackle the tax challenges arising from the digital economy, and then later on, additional update was released with global anti-base erosion rules under Pillar 2. And with this, we might say that we have finally reached our destination, as we can start now covering the global minimum taxation rules under the mentioned two pillars. So let's start with Pillar 1, which provides profit allocation model, where the profits will be allocated to the market jurisdictions regardless of any physical presence in those jurisdictions. Also, it will apply to multinational enterprises with total profitability above 10% and global turnover or a worldwide revenue of initially above 20 billion euros, trying to ensure that multinational enterprises pay a fair share of tax wherever they operate. Good, that was for Pillar 1. Now let's move to the second pillar, which provides the global minimum taxation model or GLOBE model. And here this pillar introduces a minimum effective tax rate of at least 15%, which will be calculated following a specific mechanism. Also, it will apply to multinational enterprises with a total consolidated group revenues or total turnover above 750 million euros, trying to ensure that their income is taxed at an appropriate rate. Well, that was a high-level overview about one of the hottest international tax topics now, which is global minimum taxation rules under BEPS project. More videos are coming, so like and subscribe if you would like to see more interesting tax videos, and thanks for watching TaxGate.